Alright guys, welcome back to another video. This week was a very confusing one for a lot of people. Gold dumped, silver dumped, stocks fell very heavily except for Meta, and a lot of traders just didn't know what to do. So instead of asking myself whether the market is bullish or bearish, I approach weeks like this with one simple question. Is this a good week to get paid to wait? So this video, I'm going to be breaking down what happened this week in simple terms, and more importantly, how I'm looking at the market from specifically an options selling perspective, and see if we can frame any trades or we can just get paid on premiums this week. So sit back and relax. We're going to go through a quick breakdown and then go into the trades that I'm looking at for the week, and specifically some sectors I would want or I would stay away from. So like I said, this wasn't very much a bullish or bearish week. I think this was more of a reset week. Explained very simply, earlier in the week was fine and the end of the week was just very shaky. Gold obviously was a big one, and silver being an even bigger issue here. If we go to XAG/USD, which is the ticker for it, you can see that we had a historic fall off here. This obviously spooked a lot of confidence, and when you see moves like this, it usually means that too many people were on the same trade direction and everybody rushed for the exits. This kind of action doesn't make me aggressive. It just makes me very, very patient for my trades. So how does this affect the overall market? Because obviously silver and gold were going on a huge crash. If we look at the NASDAQ, we did fall off pretty hard. The S&P did hold up a little bit better, but overall growth stocks dislike this uncertainty. So nothing fundamentally broke here, but confidence obviously dipped very hard, and this changes how everybody approaches risk in the markets overall. So weeks like this are actually great for cash secured puts if you are patient. Uncertainty equals range-bound price action, so we should start seeing a bit of a range forming here on the charts before having a nuclear moonshot. Range-bound just means good premium opportunities where we could sell a cash secured put at some of these levels before that moonshot, obviously. And there's really just no need to predict direction here. You're not asking, will this rip? You're kind of just asking, where would I be happy owning this, at the levels that we're currently trading at? So instead of hunting for the next big move, I'm going to filter stocks very simply with 3 questions. Did the stock pull back without breaking? Would I be okay owning this if nothing happens for a good period of time? And is fear higher than the reality right now? If all 3 of these are lining up, that's when I will even decide to look at the options chain. So let me give you a few examples of the type of stocks I would look at during weeks like this. These aren't recommendations. This is just how I would evaluate companies from a cash secured put perspective, or even framing a swing trade on a stock using a cash secured put as an entry and not going for those premium gains. So these are obviously strong businesses that pulled back with the overall market. If the NASDAQ is dropping, everything in there is dropping. So Microsoft, for example, got unnecessarily hit, as I would believe. We did have the earnings, which were beat, which is great. And, we obviously did have a pretty big sell-off after that. So I do think even Microsoft is pretty undervalued at this current point. Again, this is never financial advice. This is just my opinion. So I wouldn't mind trying to find a way to get a cash secured put entry for a swing trade per se back into like these levels of resistance up here, because this could be anywhere from a 14% to a 20% gain just from getting it from where it's at now back to those resistance levels. So we could use Robinhood stock, for example. This is a stock that I actually have a swing trade at. I have an entry at 108. Personally, I do think we did have an unnecessary fall off with the NASDAQ obviously taking a dump. And again, this is just a strong business here that pulled back with the overall market. Nothing is fundamentally broken, and personally I think this is very undervalued. I said this in my last video, and I will be looking to take this swing trade back up to around the 124 area, 125 to complete my swing trade for a good gain. But what we can do is we can actually take a look at an options chain with Robinhood and use this as an example if we were selling a cash secured put this week for just a premium gain, or if we were looking to take a swing trade example on this stock in particular. So if we hop over to an options chain right now and we are on Hood's ticker, I'm set to puts and we are expiring at the end of this week, which is going to be February the 6th. I could sell a cash secured put on Hood at the 94 level and earn a 1% premium on that stock gain from premiums alone. So if I hop back over to the chart, that means we could sell a cash secured put all the way down at the 94 level, which is right here. This means we'd be picking up Robinhood at almost a 5% discount from where it's trading at. So like I said, if we go back over the options chain, we can see for puts, you can see how much percent that you are actually earning for just agreeing to buy 100 shares. And again, that is obviously the caveat here. You have to buy 100 shares to do a cash secured put. So with Robinhood trading at $94 a share at this price, you would need $9,400 to do this at. This also means that you would earn a $94 premium just for agreeing to buy 100 shares expiring at the end of this week. That's pretty phenomenal. Obviously, if you did that every single week, that means you're making $400. You don't even have to touch this stock in general, but you're picking up Robinhood at a 5% discount. You could see this as catching a falling knife. I think this is, just currently undervalued and being dragged down by other stuff in the world, like especially with this dump that we just had, everything's being pulled down currently. So having this as a quote unquote paid limit order, as you could say, this would be a great spot for just premium gains, like I said, because you would just be earning that free 1%. And I really don't think Robinhood is going to drop another 5% in the next week, especially just ahead of their earnings as well. If you were looking for more of a swing trade and this was a level you liked it at, we don't really have any support zones at the moment that are being made, but you could bump this up to say, let's go with 197, or let's go 196 actually. So if we hop back over to an options chain, we can see at $96, you're making 1.61%. And with that, you might actually get tagged in here for a almost paid limit order, like I always like to say with cash secured puts, and then you can ride this all the way back to the highs. So that would be something that I am looking at in particular, like in large cap tech right now. Obviously, growth and AI infrastructure right now, something like NVIDIA or Broadcom. Obviously, we're looking at volatility to be very elevated at a current time like this. And, long-term demand is intact. So premiums usually reflect fear. And this is where selling puts below current price would make more sense than chasing. So anything AI kind of related or growth like NVIDIA, I think that would also be an interesting, overlook on the markets to see what kind of premiums we'd be looking at and what limit price we would be entered at. Now, I did want to take a look at something with a higher volatility. So I did want to use SoFi as an example because we had a massive dump. As you can see, they just had their earnings and revenue reported and, they did pretty well. They beat their earnings, which is great. And we had a huge slump. Personally, I think, this jump right here, as you can see, was due to the earnings, that hype. And then after this is kind of where the silver and gold issues dumped down and, obviously hurt us a lot. So we are assigned the shares at $25, even though we're trading at $22.80. So we are considerably below that limit price right now that I would have set. I did want to take a trade around this area and have it ride back up this way. But with everything going on, I do think this is why that we are trading down at this level. But for someone who isn't in a trade on this in particular, if we hop back over to an options chain and actually check using next week, end of week, we can see where we would be able to pop a put on this and see where a swing trade or just a premium could be made. So if we hop over, the minimum I like to target, like I always say, is 1% for whatever that period may be. So if we're looking at just for the week, I'm looking at 1% for that week. So this would be at 22.5. So we would be very, very close in price to, where we're actually trading at. You wouldn't really have much of a buffer. So it really wouldn't make sense to do a premium put on this for the week, meaning I'm not selling this just because I want premiums. The premiums aren't very good this week in terms of where we would actually be picking up the stock at. But if you were looking to take a swing trade perspective on this, you could earn 1% just for agreeing to buy the stock right here. And if we even just, dip below it by the end of the week, and grab it, you have a lot of upside to go. There isn't any support levels at these areas that have been made just yet. So this is a little bit of those riskier situations where you have to do your own research and really understand the stock fundamentals. This is a stock that I'm passionate about. So me owning it at $25, I'm really not concerned at all. Obviously that means I'm a little bit in drawdown, but me personally, I might even allocate more of my portfolio to this level. As you can see, we just freed up around $31,000. Right now in the portfolio that I can use for more puts. I do have some other stuff that is expiring later. This is the current watch list that we have going right now. Pretty tech heavy, but we'll see how this plays out over the next little while. But with something dropping like this, you would want to be a little bit more conservative with your strike price. This is very key. You don't want to be forcing any trades here. You can scan options chains to see if the market is paying, enough to take the risk for either just a premium kind of trade, or if you're looking for obviously a swing trade like I am. And this is why I don't force trades. When the market does feel very weird, most people feel pressure to do something or sell something or buy something, but I just don't. I'd rather sell puts where I'm comfortable and let time do the work. So if nothing sets up, I just wait, and that's still very much a win. So overall, how this fits into my strategy, this is why I like options. There is no rush. There is no perfect timing needed. You obviously are just paid for patience in a situation like this. So if the market goes nowhere, I'm still getting paid on this, and I'm just deciding whether I want to take more of a premium position. I think Hood would be the best example of this, where we could get it at a 5% discount. So I don't think Robinhood is dropping another 5% ahead of earnings as well. But if it did, we have an even better swing trade price that we could take that at. So definitely understand which road you want to go down, whether that is going to be more of a swing trade perspective, or just you want to be paid for premiums and you don't want to be holding that stock at any point this week. But overall, this week is not going to be about being aggressive. It's going to be, very, very selective with everything going on. So if the market calms down, I already know where I'd be happy owning some of these stocks. If it doesn't, I still get paid to wait. So this is why the approach works in weeks like this. I don't really stress when the market is noisy or, the NASDAQ and gold are falling off a cliff. It's one of those things where I'm very aware of what's going on, and that just kind of affects how I'm playing certain stocks. Like I said, with Hood, I would be looking for more of a premium play. So I'm going, hey, I'll take it if it drops 5% lower, but if it's dropping 5% lower, I'm still getting paid a fat premium, and I have an even better entry for a swing trade from where my average is at 108 right now. Whereas something like SoFi that we were looking at before, the premiums are not very good on this, as it stands right now. So this would be only a swing trade perspective that I would be looking for. If you guys want me to look at, any stocks or particular sectors, make sure to leave a comment. I'm very happy to make just a separate quick video, analyzing that certain sector with everything that's going on. We can take a look at the premiums as well and see, whether that's going to be more of a stock trade, like a swing trade, or if that's going to be more of just a premium cash cow. But overall, switching the channel to more of a options focused channel, makes me really happy. Some of the feedback I'm getting, via DM has been really great. So I definitely encourage that. I'd love to see you guys commenting on videos, more stuff that you want to see. But if you found value in this video, make sure to leave a like, subscribe, and we'll see you guys in the next one.